I'm not saying much, sir. Okay, guys, good morning. I hope you all are doing great. So, our week again, we are also for us to look into the market. Why is this background? Okay. I hope you all can hear me. Good morning, good morning, good morning. If you can hear me, just drop one on the comment section. If you can hear me, drop one on the comment section. Just drop one on the comment section if you can hear me loud and clear. So, before we start, if you can hear me loud and clear, drop one on the comment section and then we'll put it. All right, good, good. So I hope everyone is doing great. So today we're going to be looking at the market. But first thing first, I hope we all had a very nice weekend. So it's a new day again, a new week, new opportunity. So whatever that has happened last week has happened. Market did its own thing. All we are to supposed to be doing is what following through with our own analysis and making sure that we're applying proper risk management to anything that we are doing. Right. So basically, what we're going to be doing today again is we are just going to be doing overall view of what the market is actually doing, and then figure out exactly what we can do. Those who were on the last session could actually testify that we did analyze the market towards the direction it's actually facing right now. And that the most important thing here is being able to make money off it, not just analyze it, but being able to make money off that particular opportunity, right? So what we're going to be doing right now is going to be looking at for possible opportunities and seeing where the market is heading to, so we can actually what prepare ourselves and our mind towards where we're supposed to be focusing on. I think during the weekend, I just went through the market and I saw some certain things that we would have actually done, right? That could have actually given us a good amount of money. But sometimes when you are in the course of the trading week, a lot of distractions, a lot of things might just be here and there. But always making sure that you are showing up, always making sure that what you are ready to what embrace those mistakes that you've done and making sure that what you improve on them, right? So we're going to be diving down into the chat now. But first thing first, you want to make sure that what you're subscribed to this channel, making sure that you're in the free Telegram channel as well to be able to drop our day-to-day trades, right? And also making sure that what you use the recommended brokers, they are there in the description, right? Use brokers that you know that whenever you want to make your withdrawals, you don't have issues. Whenever you take a trade, they don't tell you that like, oh, you bypass our system, something like this happened. Or use brokers that you know that they are willing to help you grow and improve. So we have them in the description here. Make sure you use them. So we're going to be looking down into the chart right now. I'm going to be sharing my screen, so we'll look into the market and then let's see what we have, what the market has for us. So, all right, dude, I'm sharing my screen right now. So, okay, if you can see my screen, please just drop one in the comment section. If you know you can see my screen, drop one in the comment section. Let me see. If you can see my screen. If you can see my screen, drop one in the comment section. If you guys are seeing my screen, drop one in the comment section. Let me know. Let me know. Before we fire on. If you can see my screen, just drop one. All right, good. So let's look into the market and see exactly what has happened, right? All through last week was just a bearish move. If you have actually positioned yourself for the market, trust me, you would have actually made something significant from this market. Trust me, no matter what, you'll be able to get something out of the market. Trust me. So let's look into the market. So basically, if you can see, we actually you can see that the market is in a what in a bearish move, right? So let's start from the weekly first and see what the market has for us. So on the weekly, last week you can clearly see that last week was a clear bearish candle, right? A full bearish candle. Let us use the word engulf now. A full bearish candle, telling that what there were more sellers in the market than buyers. The previous week before last week was sell, and also these ones was sell. And now this is a new week, right? This new week now we're already having sales rolling in already, right? But the question now is, are we just going to be jumping into the market because we are seeing sales on this higher time frame? No, obviously you know that we're supposed to be looking at for what our lower time frame for structures and entry models, right? This is just giving us a overview of what the market is doing, who is in control, right? So now, as you can see, there are some key levels inside this particular range that the market was actually took at last week, and this was like a key level also to just a support level that we are looking at price coming into and taking at. And obviously, as you can see, price is actually taking at this low. Now the question now is, where is the market heading to? Is the market going to keep selling, or is it going to reject? So that's one or two things that we need to figure out right now, and also be able to follow through in the course of the week, right? So basically, what we're going to be doing now is just highlight some key levels in the market, as you can see, some key levels in the market. If you take a good look at what happened here, there was a pullback here, right? This pullback actually gave us a support level where price actually continued buying from. So which is this guy here that actually highlights this horizontal red line, right? So why am I marking here as my as a key level? You can see when price moved up to this point, you can see that when price moved from here to this high, what happened? We had a pullback here before the market eventually made this new high here, right? So this is a key level for me where we can see market possibly selling into, right? So that's a point. Now, all we're going to be looking at for, okay, since price has actually broken out of this key level, which is a support level, are we going to have a retest of it and continue? Or we're going to have a pullback into filling this guy here before a continuation? So let's go down to the daily time frame. So on the daily time frame, you can clearly see. So more so, this is like what, a break of structure. This is a break of structure, as you can see. Price actually took out this low already. But now the question now is, how is this guy going to close? Are we going to close this? If this day is going to close beneath this zone, or we're going to be rejecting inside? So what today we hold for us is what we are actually still waiting for. So there might be what, a sell closure, right, or a rejection. So whenever I can say this is London session, during the course of the New York session, price might just what, see decide to retrace, and then making this candle what, a week, right? But right now we're going to be focusing on what we actually seeing. So the possible next area where price might get to is this resistance, this support level, which is a horizontal red line I put in here. So this is the next possible level we are looking at for, because this guy has been taken out, and then the possible thing that can happen is we having to see price what, retrace back into these guys' inefficiencies, these drops that we're seeing, for further what, sell, right? Or best thing, the market might just keep on what, selling, right? I just keep on selling. So we're going to be trading what we are seeing, not what we have in our head. This is what we are doing right now, is just what, evaluating the market, seeing the possible potentials, the areas where the market might want to fall into, right, or move to. So now, since we're in a bearish market, all we're going to be looking at for is what, the possible sell opportunity. These areas, this zone now is a very key zone that we want to look into right now, right? So let's look into the H4. The H42, we have a continuation sell power as well too. So um, as you can see, we have a break of structure here on this H4. Had a break of structure on this H4. So for any reason, if we're going to be looking at for buys at all, we want to make sure that we're having a shift on this key guy here, this zone here, on these H4 zone. So when we start having a shift on the H4 slash maybe H2 or H1, then we can now start looking for possible demand areas holding. But right now, all we're going to be looking out for is how price can eventually pull back, and then we'll look out for what, a continuation sell. So even on the H1 as well too, on the H1, okay, we can still see that on the H1 we're having a rejection candle. But rejection candle does not mean that what, the direction has changed. That's just something that might just indicate for what, a pullback. So all we're going to be watching out for right now on this H1 time frame is just what, a possible continuation, because what the market has been doing is just a continuation sell. Even on this H1, you can see clearly for yourself, just by what, paying attention to what, market structure in the basic form, the basic form. So these are just drop. So but what I'm going to be looking out for is the main areas of swing. So on the H4 will help you get the areas of swing, which is in terms of trying to align the lower time frame with the higher time frame, right? So now all we're going to be looking out for is how to be able to follow through with this market if we're going to have that condition sell to this support level. But right now, I don't think there's any, because for me, what I was actually expecting is when price take at this particular key level, right, we should eventually get what, a retracement. Should get what, a retracement back into these areas. That retracement is not for any reason but making sure that all these inefficiencies that we're having here, that price didn't tap into, price should possibly come back to it again, right? But nonetheless, before you start looking out for these areas where you think price might want to tap to, we still have one here which has what, its own structural break here. So price, what we're going to be looking out for first is these areas where there's inefficiency. So event, because price might actually retrace into this area now, and then what, continue to sell. So because this guy has to be taken out first, if we're going to even be looking out for what, a continuation buys, it has to be what, taken out first before we look out for what, a continuation buy. For any reason, if there is no price taken at this, if price delivery is not taken at this high, then we should what, anticipate what, a continuation of what, the sell, right? We should anticipate what, the continuation of sell. You just want to keep it simple, making sure that what, you don't overdo things, because sometimes that overdoing, all of analyzing, all over trying to make sure you we employ different strategy. Trust me, that is what almost, that's what give us most losses that we can't just even come out of sometimes. So you want to try as much as possible to keep it simple. When I was looking out for these all these moves that happened week here, I was like looking at some setting up and I'm like, so these are things that I would have just even made money from. Although last week was kind of being a busy one for me, I was just here and there, right? But still trying to make sure that what we see trade and but mind you, if you want to really get something from this market, you want to make sure that what you are fully set, you're prepared, you are monitoring the market from the higher time frame perspective down to the lower time frame you get into your market. Because sometimes the market must have reached a key level on the higher time frame while you are on the lower time frame trying to make sure that you are buying or trying to sell, unknowing to you that you will see your setup on the lower time frame, but because it is reacting from a higher time frame, you might not now get what you are looking for. Market might just stop you and still move in the intended direction that you actually anticipated. And that was some certain things that actually happened to me last week, right? So you just want to make sure that what you are not just analyzing with just your phone or staying on the lower time frame. You want to make sure that what you are looking at for trade, the setup, or looking at key zones on the higher time frame. Because on the higher time frame, it's easier for you to be able to move in the direction that you want to go and flow in the direction for ease and good entry model. Because the moment the price is actually moving towards a particular direction, right, and you're actually spotting a setup aligning in that particular direction, trust me, as little as even you trying to even use a tighter stop loss for you to get to good risk to reward, the moment you are in line with that particular direction, and you actually entered well precisely with your maybe your candlestick confirmation, or maybe you're using a demand or supply zone, or you're using inefficiency or whatever, trust me, you'll be able to what make good money for yourself. Just making sure that what you are aligning yourself with your higher time frame direction. Anything aside from that, trust me, you're just going to be taking unnecessary losses. Imagine people that were on the buys, yes, on the buys, trying to counter the buys or trying to catch the buys last week. You will see that they were what they were just being stopped at. Although if you try to get in for the buys, right, fine, you might just get a good possible opportunity. But if you do not take profit on time, the next thing you're going to be seeing is what you're going to be stopped at, and then the market is just what tanking down. So, in as much as let's say you have actually looked out for the overall direction of this good as of last week, all you just need to do is just position yourself for the areas of significant point, the inefficiency point, and then look for continuation. It's as simple as that. This morning when the market opened, what I just did was I knew that okay, price was actually going to sell to this particular low because when the market opened, the market we had this. Let me see. The thing here is, I was not really even wanting to do anything, but I just saw that okay, I have this money on this particular wallet. Let me just dump it there, right? It's just like a little fraction of what I left on when I did some exchange. I just like okay, let me just play with it because what I was actually looking already, I was looking at price selling down to this key resistance level. So when the market opened, the market was around here, and already I noticed that okay, price has broken out of this low, price respected this inefficiency here, and there's going to be a continuation. All I just did was just to enter because when I saw the market price was just around here, just around this candlestick here, this candle you're seeing. So what I just did was the money you saw me post on the Telegram channel, it was just from here to this particular zone, and then and I went out of the market. Now imagine if I was still holding that trade, and it was just 3,000 naira, 3,000 naira that gave me over like 57K. Just imagine. So if this from this particular point here now to this level gave me that, imagine if I actually held the trade down to this particular point. But the reason why I didn't hold the trade was because where I was looking at for as key point of exit was this guy already. I was supposed to look out for the sales from this area here as at that on Friday. But on Friday, I was very, very busy, honestly speaking. I was very, very busy. So I couldn't even get any entry opportunity. So imagine you getting in for yourself from this particular point to here and on your life account, see what you can actually make. Now imagine when the figure is actually very, very big. We are taking that kind of risk. So sometimes you take some certain risks just to get big gains for data money, food money, and so all that. Why you can use a bigger account to be able to leverage up on something significant you can do. So that's why one thing you need to know that see this market, as long as you're able to know what, as long as you know what you are doing, right? As long as you know what you are doing, trust me, you will always make money. Even though you lose money, it will only take time, you will make money. Now, the only constraint there is, let's say when you are trading a proprietary firm, for example, now you're just restricted to some fraction that okay, even if you take some certain losses because you want to go overboard, you want to take some risk, you're just capped to let's say 10%. But imagine you are trading a $5,000 account or a $10,000 account, and for instance, that you are risking let's say 1 or 2% of that money. You know that it will take you 100 times to take losses for you to be able to blow that account. 100 times. But on proprietary firm now, you're just being capped to what 10%. So imagine, will you now tell me now that if you know what you're doing in the market, you're going to be losing 100 times? is almost impossible unless you are over risking, unless you are not risking 1%, you're just maybe loading 10%, and in 10 trade you've blown the account, right? So that is the importance of having your live account as well. That's the importance of you trading live money while you are trading your proprietary firm to what to scale up capital. It's very easy, because trust me, prop firm is not easy. The way if you think it's easy, it's not easy. But it's one good way for us to be able to make money for ourselves. So take advantage of prop firm, take advantage of live fund. Live fund is what you can actually just trade off and just withdraw ASAP to sort your daily needs and maybe save up for monthly or whatever thing you want to do. But proprietary firm is a very good way. But the only thing is you need you need crazy discipline and patience, because the most important thing is of being patient, because that is one thing a lot of us don't really do. A lot of us are not patient because you want to start comparing yourself with other people. You want to start seeing that okay, because this person is making this particular wave and this money, let me quickly just pass my challenge and be able to make money. See, you don't want to compare your chapter one with someone else chapter 10 or 9, right? Just focus on yourself, do your thing part time, and that's it. So right now, so from the H4 time frame, what we're going to be looking at for now is what making sure that what we have what a pullback into these guys here before we look for anything. So let me look at the lower time frame on the 5 minutes if I can see a setup there. Let's see if we can have a setup. So okay, let me see M15, even on the M13. So basically, it's just we are still in for the continuation sales, right? Because if you take a good look at what happened here now, price just pull back, broke structure, and then we'll have this inefficiency. So obviously, price is just going to pull back into this inefficiency, and then we might just have a possible continuation of the sales, right? So I have a possible continuation of the sales because on the H4, let's see, on the H4 right now, we still have price needing to come back into this premium side for this particular range, because from this high to this low now is a range on its own. But the most important thing now, the fact that price is below this zone here, I want to be very very much careful first, because today is just Monday and we might just have price still rejecting back in again. So we just want to be very very careful. But for anything, the most important bet, the best bet for us here is looking for the continuation sell. So on this M30, since price actually took out this particular region, price took out this particular region, right? And see we have some key these zones here for price to coming back. So these are inefficiencies. So price might still even respect these inefficiencies, right? And then continue selling. So my half price respect inefficiency this way, respect this inefficiency, and then continue for the sell. But that way you don't want to just jump in because it's respecting efficiency, because you need confirmation. So you just need to just go down to lower time frame on the M15 or M5 to be able to figure out entry models that you are using to go. But for me, what I want to do is look at the market for now, making sure that everything is aligning well. If I'm seeing a setup for a sell, then I'm going to put out that sell on the free Telegram channel for us to continue selling. But I need confirmation first. And mind you, this is just Monday, so we don't want to rush into anything because of we want to make money, I want to pass our challenge. We need quality setup that can really align well with us. Lately, the market has not really been giving me my setup, like setup that I know that yeah, I can actually just put in for pending orders, and I know that once it's tapping, it's just going. I've not for a long time now, I've not really gotten set up like that, but nonetheless, what we're going to do, we just want to make money, so we're going to employ all that we've known already in a smaller fraction into this market, right? You might have learned a lot all through different mentorship and whatsoever, but what you just need to do is just employ the little ones that you know that can just fetch you money at that time, not just trying to overcomplicate it. So as you can see, what we've been talking about in the market, and just market structures and basic things, nothing really complex here, nothing really complex. The most important thing is understanding the direction, understanding your structure, and being able to mark out the that entry model that can help you make money from the market. Because at the end of it, it's not about analyzing from head to toe. It's not about analyzing from A to Z. It's about just what making money for yourself, being able to what get money for yourself consistently. So we just want to be patient, look out for what the market can possibly do for us, and then we take advantage of the market. Feel me? So I'll be looking out for these areas. Why wait patiently? So If there's any setup that was going to be rolling in, trust me, I'm going to be putting that to the free Telegram channel. I just want to make sure that you are active, and then we have it. So that's just it. So is there any question that you need to answer? Is there any challenge that you guys are having? So we'll tackle it quickly before we end the session. Any question? Any questions? Is there anything you don't understand about this or what I just discussed right now, or you have something you want to like you want us to touch on? Any pay you want us to touch on, and we'll quickly just do analysis on it. Just like keeping my things simple lately because all these currency pairs are just been moving here and there. Pricing has not really been good, so I just decided to okay, let's stick to our good for now, right? So we're just going to be focusing because it's actually moving. We just need more stuff. All right. Okay, USD card. Let's look at USD card. So what are you looking at for USD card? Are you looking at buying or selling? Or you've done your analysis before? Okay, you said okay USD card. So we analyze the USD card and then okay, please help identify the breaker block that caused the break of structure on this M30. Looking at that. So we said breaker block that caused what? The breaker block that caused the break of structure on this M30. Okay, breaker block. Are you looking out for breaker block or other block? Now the breaker block obviously like what also what a lot of us usually look into. When the most important thing is you don't just want to mark areas as breaker block. The most important thing is some people will call this one here breaker block, right? Because this was supposed to hold this demand. So this like a region where some persons will want to take our trade from as the breaker block, right? So, but the question is me, I don't like trading this kind of breaker block. I like to trade breaker blocks. This might just be for a rate test, maybe just like a break and rate test of this zone. So it's actually a key level. For me, I like breaker blocks that's like a demand areas that have actually failed before, right? Areas that have actually failed. So let's say when price break this high, this has the break of structure, this should become a demand, right? So the demand is supposed to be what another block. So when the other block fail, now this become my breaker block because this was supposed to be an other block which now failed. So that way I cannot look into selling from this particular one here and jumping as what a breaker block, but some as a breaker block. But sometimes, yeah, stuff like this do also play out as well too, because they are key levels in the market. They are significant area in alignment with what we're having here inefficiencies. So price might actually want to react of this area here in alignment with this inefficiency for price to sell. And that's why I said, okay, we need to wait for what for confirmation in this area before we dive into the market. I hope that's clear. So the price retest it and move down. Exactly. So when price is going to retest that area, and all you just need to do is what make sure that what you pay attention to your entry model. Unless you just want to have your price just or you just want to have to pen price them. Like okay, you just want to put your pen in order, then just risk it to say okay, if it actually play that way, then you know that okay, you just retest, but you want to put your stop loss above the high for in case of maybe the market want to stay push up, but wait for confirmation before doing that. Okay, so let's look at the USD card. So Aurelua was saying that he was looking out for buys, right? Buys on gold. Obviously, the fact that gold is actually selling, you should know that anything dollar cross like this should also be buying, right? Let's look at for the USD card that you're talking about. USD card. So USD card. So USD card. So on the USD card, trust me, the number one thing you want to see actually is what you want to go to your higher time frame because that higher time frame now is what is going to lead you These are some of my markups I used to have when I was trading currencies. Trading off psychological levels back then. These are markups that I did in the past. You can see the markup I did in the past. Well, don't really use this method again. These are when I trade on the intraday slash swing mode. So, but let's remove all these things. Let's remove everything. Let's remove all these things. Or let me from add up from another broker. Add up from another broker. All right, good. So basically, this is the daily time frame, and from the daily time frame, if you want to take a good look at what has happened here now, we can clearly see that we had a break of structure here on this guy here. We had a break of structure on this guy, so we are in between what this range, this range, and this low. That's number one thing. We're in between these ranges. I know this is the premium side and then this is the discount side. Obviously, we're already tapping into the premium side, which we want to look at for continuation sales. But the first thing first is let's take a look at what's happening at the left hand side to see where the market is coming from and obviously heading to. So on the weekly, this is the weekly time frame. This is a weekly time frame. And clearly seeing, we can clearly see that we having a continuation bias here because from the weekly perspective now, this was a break of structure here. Price actually broke out of this region here. This is a break of structure. Alright, this is a break of structure, and then this is a push to the upside. So price came back now, respected this key demand area that we can see. The key demand area. Can you see that? So this is a key demand area. Yeah, on the weekly time frame that price is actually tapping into. So the question now is, price is bullish, but price is tapping to the key demand area. Now the question now is, what are we going to be doing? Are we going to be looking at for sales, still selling, or looking at for buy? Because if we want to look out for sale, we want to make sure that these particular areas are actually filled. But right now, we've not seen any failed region. So this one here too, what price just did was to come back and sweep. You can clearly see that price literally just swept through this zone here. Not like you are seeing any rejection. So simply means that if this area here that we're looking at for selling from might not possible hold, we might just have to look for continuation of the price. Right? This is a sweep. This is a resistance level. This is a resistance level on the weekly time frame. This is a resistance level, and this was a support level. Now, price is rejecting off the support level. So, what is the possibility that might happen? Price might either continue for the buys to take out this resistance level, right? Before even anything we think about the high, right? So, but what we also want to consider is on this substructure, because this structure you are seeing inside this break, let me indicate so we get to see it properly. These we have a break of structure inside. That will be for the lower time. That's a substructure for this low and this high now. So first of all, we need this high here to fail for us to look out for that continuation. So even on the daily time frame, there's possibilities of price reacting from this inefficiency here, all this inefficiency we are seeing. There's possibility of price reacting inefficiency before maybe dropping and then pushing. But mind you, we cannot be looking out for more sales because this guy has a strong demand on the weekly time frame. So all we're going to be looking out for is what, let's look out for what possible continuations of what, of buys, possible continuation of buys with good entry model. If it's not continuously pushing up to break and then giving you that break of structure for higher time, like let's say uptrend, trust me, you don't need to go into this area first. You don't need to want to look out for buys. You want to make sure that except maybe price is at this area, outside this area before you want to look at for. But the best thing here now is you want to make sure that what you're having that continuation of series of higher and higher low. First, let this area shift because we need this guy to actually shift for us to be able to look out for what the continuation of the bias clearly, right? Because if you notice, this area here was what was responsible for this break here, and you can clearly see that. So if there's anything that might happen, price might just react of this inefficiency and then want you to look out for sell. But if there is continuous break of structure and continuous break of structure to the upside, then that way now it's easier for you to what enter into the market and go. not trading in hope, but trading in alignment with structures, what you are seeing. Because right now for me, like, I cannot just even come here now and start looking at for buy opportunity because I see that okay, price reacting of this demand or the weekly time frame. I don't want to just, because you might just be stuck here. Price might just be playing around here and take you out and still go that same direction. But the best thing is when you are seeing price projecting and giving that higher highs and higher lows in terms of price delivery to the upside. That way you can easily jump in. Take for instance, like, you can see when the market was moving from here now, this kind of scenario now, you have it clearly that price was continuously breaking the highs. So if he's breaking this way now, you know that if you're entering from any of these area here now, for instance, now you know that this area is a protected low because this was what broke this high, and then you target the next possible high again. You go out of it and then see how it moves up again, had a little pullback again, some little confirmation, you go in again. As simple as that, up until when price fails to make a new high, and then you see how the price dump back again into this region, coming back up into this region, and then reacting and still failing this guy. So for price to actually fail this guy, you know that this area is actually strong. It is not where you want to just looking out for start buying into. You want to make sure that what this guy actually fail truly before you start looking out for what possible continuation to the price hike. Since you are looking out for buys, you feel me? So Aurelio, I hope that that's clear. I hope that is clear. All right, good. So we're going to be waiting patiently for our setup and then make sure that what we just shared here is what you're looking into. If it's not clear, you let it be first. Look out for setup that are clear that will give you money, not the one that will complicate things for you and possible stress you. Look out for the ones that you know that yes, they are very, very much key in alignment with what structure is saying, and then you are good to go. So we're going to be waiting patiently for our setup on gold, and whatever they set up, win or loss, we are going in. But trust me, this week, we are ending this week profitable. I can assure you that by God's grace. So let's just be patient and then stay active. We get it done. Thank you for joining the session, and then I'll see you guys inside. This.